Hello, Rabea. Welcome to the Builders Podcast. It's a pleasure to have you here. How are you today?
Hey, Mikhail. I'm good, thank you. How are you?
All good, all good. Would you like to
Great.
start to give us an introduction of yourself? I know that you have a crazy interesting background, and of course, have Quidkey as a company.
Of course. So first, thank you for having me. This is very interesting. Appreciate that. A little bit about me. I'm Rabea Bader, the CTO and co-founder of Quidkey. I spent most of my life in tech, banking, startups, and building interesting products that I like. And in my last company, we built a construction fintech product that helps businesses and construction companies manage the finances at the end of the month. And this is as well where I met my current co-founder and where we actually started digging deeper into payments and what eventually led to us building Quidkey.
Very interesting. Last time that we spoke, we were starting from basically your experience in payments, and I was wondering what actually made you thinking about, okay, this space is something that need a little bit of innovation. So what's about your experience that's saying payments are too slow, too complex, and we need someone doing a better job about them.
Great. So I can talk about the problem and then say how we're
Yeah.
solving it in Quidkey. A little bit about the problems and where we saw. So while building as well construction fintech and construction finance, we saw lots of money being moved at the end of the month. And at the same time, there were lots of solutions in fintech. And there was one thing that is mainly in common. Money needs to leave one bank account. It needs to arrive to a different bank account. But with current solutions today, it stops 3, 4 times in between. If you're using a card, if you're using a check, if you're using different ways of payment, especially with a card, you have an issuing bank, acquiring bank, and then you have also the payment processor, the network that each needs to take a small clip. And this creates it bigger issues when moving money. So was the main problem that was something interesting there.
Mhm.
But also, if you look at it, it becomes way more interesting when you start looking at cross-border payments, right? Because it's not only those complexities, you have additional complexities that are brought on. For example, if you want to expand globally and cross-borderly, in most cases, you need to start a legal entity or a company in the jurisdiction you're expanding to. So if you're going to the US, most likely you're going to have to incorporate a US company. You need to have issues with FX and deal with FX, money delays, chargebacks, cross border, and most importantly, taxes. And those are some of the main issues that we started seeing. And this is actually what Quidkey does. So we help businesses expand globally using Pay by Bank. And we can also explain a bit to the listeners about Pay by Bank in a second. And we do that by helping businesses actually increase conversion, pay less fees, and
Mhm.
also have a one-stop shop that allows them to expand without any cross-border complexities. So no need for a merchant of records and MOR that you pay 6, 7%. No need for you to utilize card systems that you pay between 7 to 10% on cross-border. And this is where Quidkey comes in to help solve that problem
Yeah.
or
So
those problems.
I would say let's start from the problems first of all. So you're sitting right now in Germany. I'm sitting right now in Italy, and we all know how complex those kind of payments are in both countries. Mostly when coming to paying providers, paying suppliers, and mostly when coming to cross borders and in that perspective. So where do you see, and maybe jumping a little bit into the tech side, where do you see those kind of flow getting wrong? Because we see that a lot of people in the middle needs to take a stake in those kind of transactions. Mostly when coming to having intermediary banks, having suppliers, having issuers, and all of those kind of people. Where do you see those kind of those kind of flows being wrong, and where do you actually innovate those flow, and where do you actually bring a little bit of technology to make them a little bit simpler and a little bit smoother?
So that's great. Let's take an example of a German or an Italian company, for example, selling into the US. So
Hmm.
today, even if you are coming from Europe and you're utilizing Stripe, Adyen, or any other payment provider with cards selling into the US, your acceptance rates are automatically between 80 to 85%. Why? Among many reasons, US Bank doesn't like cross-border payments and they don't like to work with non-US entities. So you will find yourself going to open a local entity in the US in order to start accepting payments in the US at a higher percent, 98%, let's say, of acceptance rate. So this is one of the first issues. If you want to sell into the US, you already need to incorporate a company, have an accountant, have a lawyer. So your operational expenses and complexities jump like crazy. So this is one way for you to get paid. And then the fees that you pay for that, you need to pay US fees for cards. Let's say because you have a local entity, you pay 3%, and then you pay another 1% for cross-border payment, then another 1% for FX exchange, then another few percentages. And in average, you find yourself paying about 7% in order to
Yeah.
get the money back to Germany or to Italy.
Those 1% actually adds up one to each other and they become like a huge cost in the end.
Exactly. And then you find yourself getting paid within 10 business days as well. So it really impacts your cash flow. If you need to pay your suppliers, if you need to pay your providers, then you find yourself in a big trouble. This is one way of you to get paid. The other way of you to get paid is if you want to get via a wire transaction, let's say from the US, a normal wire transaction. If you ask a customer, so at checkout, it doesn't really work because the customer would need to go to their bank and make a payment. So that's a user experience friction. And as well, the money, like you mentioned, needs to stop through intermediary banks in the
Yeah.
US. You need to make the transaction via Swift, and then the money takes time to arrive, although Swift has some sort of Swift instant, but not all banks support it. So you find yourself chasing the money and submitting documents to understand where the money is and then getting paid at a later time. But also there's lots of frictions for the customers. And this is where Quidkey comes in. When you, as a German company, Italian company, Brazilian company, Australian company, it doesn't matter where you are based, when you become Quidkey's customer, we automatically enable you to accept payments via Pay by Bank from multiple jurisdictions, EU, UK, US, Australia, and you don't need any additional companies or legal entities in those jurisdictions. And the way we do that is once we onboard you, we open bank accounts for you in different jurisdictions that basically allows you to manage the money that you receive and allows you to receive money from different customers. So in the US, once a customer comes to your website to make a payment, they see their bank as the first payment option because we predict the customer's bank. The customer sees their bank, let's assume Wells Fargo. They click on Wells Fargo, and then the payment becomes a local to local payment. So the money moves from the customer's bank account directly to your bank account held at Quidkey, and then we automatically allow you to decide when to get paid. So it's actually beyond checkout. So you can say, once the money arrives, please exchange the money back to euro and transfer the money. And then you can get paid even for each payment instantly, or you can decide to batch payments, or you can even decide, oh, beyond checkout,
Mhm.
please keep 10% of my money in the US because I have customers that need refunds and I want the refunds to be
Or
instant.
maybe I need to
So
pay
this
taxes
is
there, so I want to store them a little bit of money.
exactly. So for you to pay taxes, this is also where Quidkey's tax solution comes in. Once you make a payment, we allow you to set beyond checkout kind of workflows of what happens after the payment. So you can say, calculate sales tax. And this is also an additional solution at Stripe that you pay an additional 1% for. So this is where it really stacks up to above 10%. And then when you decide to say, okay, calculate the sales tax for me. So what Quidkey does is once a customer makes a payment, the money comes in based on the product, based on the customer's jurisdiction, state, and city. We calculate the sales tax and we allow you to save that money in a specific dedicated tax account for you in the US or in the EU or in the UK, which
So
basically means, sorry.
yeah, no, sorry. I was saying, so basically the solution that you found was to actually transform each one of those cross-border payments into actually a local payment, so that you avoid all the complexity, all the time, all the costs, and everything. And on top of that, you are actually issuing those accounts to people directly, so they don't even need to set up the local accounts, because in some time and in some scenario they actually cannot set up those accounts.
Exactly, exactly. And with the fact that we are making it local, what does it basically mean? Your acceptance rates are close to 100% because it is a bank to bank transaction. So
Yeah.
as long as your end customer has a bank account, they can make a payment in order to pay you. They don't need a specific card. They don't need their bank to support a cross border or out of the US entity. So it becomes very domestic to domestic, and we allow you to control and ship the money back to your bank account.
That's actually very interesting. And one of the major problem there has always been, the from one side the complexity, but also the timing, and actually find out that you can do local payments instead of cross border. It's actually solving a lot of complexity there.
Exactly. And what we found some of our customers do as well and be happy with it. So what we found out that depending on the jurisdiction, because it's a bank to bank payment and it's a pay by bank, so you don't see Quidkey at checkout.
Yeah.
Basically, a customer sees their bank name predicted, pre-selected once they go to checkout. So when you go to pay, let's say your bank is bank, you say pay with bank as the first payment option. So it doesn't matter where you are as a company, we allow you to sell as a local and we allow you to connect to local customers because you're offering them to pay directly via their bank account, which creates automatically a trust for them. And this, by the way, is what we've seen increase conversion for merchants, but not only increase conversion. When you look at dry numbers, for example, in the UK, while competing with other payment options like Apple Pay, Stripe, Klarna, PayPal, our solution takes about 20% of the wallet share. So
Hmm.
20% of customers in the UK pay through us. About 16% of customers in Germany pay through us. Why? Because people trust their bank, people trust their financial institutions, and people love their bank's brand. So when they see the bank brand, they click on their bank and they are just interested in seeing what would happen next if they've never used the solution.
Yeah, but it's actually a good point because you don't actually have a huge global brand right now out there. So you're basically taking the brand of the bank itself in order to be trustful and trustworthy by the final user, and that actually makes a lot of sense.
Exactly. So the user, we don't want the user to know about Quidkey's brand. We're not interested in becoming a payment brand where you pay with Quidkey. We just want to utilize your bank brand in order that you already know and you already trust
Yeah.
and that you already have your money in. We want to utilize that at checkout. So we allow customers to pay in more ease and in more trust.
And you were mentioning the fact that you actually forecast the kind of bank that they want to use. I remember the last time that we spoke, you tell me about how you did that in the first place. So how did you actually validate that in the first time that you did that?
Exactly. It's a very
It's a funny
interesting
story.
question,
Yeah.
a good story. When we started and when we were thinking about started Quidkey, we started interviewing people, right? In order to see, is the solution interesting? Is there a problem that we can solve? Or is it just, I think there is a problem or I feel there is a problem? So we went out and we interviewed more than 500 businesses. My co-founder and I flew to Australia, sat with businesses, interviewed each business at one of our partners' facilities. It's Utopia. And we spoke to them and asked them about the problems that they are having. And this is how we came up with the solution. But then interviewing businesses is not enough because, yes, we are selling B2B, but at the end of the day, we have consumers and customers that actually utilize our product, right? So we also started interviewing end consumers and end customers, both in Australia and in the UK and in Germany. And when speaking to them, we would ask them about if they would use and if they would pay via their bank at checkout. And many said yes. And we asked them if we predict their bank, would they pay with it at checkout? Well, no one really understood what do you mean by predicting my bank? How would it work? How would it look like? So for each customer we interviewed, we asked them, what bank accounts do you have? What banks are you using? And then they told us their bank names. And then 2, 3 days after we interviewed them, we sent them a specific prototype with their bank being predicted and pre-selected as the first payment option. And then when they opened the prototype, I guess they forgot, most of them, that they told me what their bank account is 3 days ago or 2 days ago. So they opened the prototype and they were going through it and they saw their bank being first. And they were like, oh, like almost
Yeah.
across the board, most of the feedback we've got was, oh, wow, how did you know what my bank account is?
Yeah.
And they clicked on their bank. So we can see what actions they are doing on the prototype. And they immediately, within 3 to 5 seconds, they didn't do anything else. They saw their bank, they clicked in their bank, and then they moved to the next step in order to complete the payment. So this is how we started thinking, okay, we want to verify what customers do, how they like to pay, and if they like to pay via their bank account. And this is how we found out that, yes, they do like that.
You basically rigged the product market fit in the beginning.
Exactly. You can say that, I would say. Like we were just testing around, wanted to see if they like it, if they want it. Because before we did the prediction, when we just served normal pay by bank, where you have a list of, I don't know, depending on the country, between 100 to thousands of banks in the
Yeah.
US, where a user needs to go either search their bank or go scroll in an infinite scroll to find their bank. We found out that it takes them about 50 seconds in average to
Mm.
open the list, select their bank, and search for their bank and click on their bank, which created a lot of friction. And this is why when we added one prediction on top that we show you first your predicted bank, then we saw 3 to 5 seconds became that friction, which means it's, in my opinion, it's not friction. It's actually encouraging data. And when you see that across the first 100 users, and then across the first 200 users, and across the first 300 users, you start having data points that this solution really works and customers like paying with their bank.
Yeah, no, that makes a lot of sense. And how much time did it take the whole process of validating the flow? You said you went to Australia with your co-founders. You actually interviewed a lot of businesses, a lot of customers. So how much did it take?
It took some time. So I would say was lots of back and forth. And also we started at one place. We thought that we were solving one problem. We
Yeah.
ended up in another place solving another problem. But it took between, I would say, 3 to 6 months, 3 months in average to really like do the interviews, ship the interviews, a bit of time to build the first prototype and then go again and send them the not the prototype, an actual MVP functioning working
Mm.
code. And then we went back with feedback to the drawing board. And until we launched from those interviews to our actual launched with a merchant and a design partner, it took us about 6 months. So 6 months it took us from end to end. But with
Okay.
first, it wasn't with a cross-border solution. So the first MVP was quite focused. Local solution, domestic payments with bank prediction. Let's see how that works. Let's see if the merchant gets any value from it. And let's see if the customers get value from it as well.
And you see differences in markets when coming to checkout, when coming to those kind of payments, because you were mentioning, validating in Australia. You're obviously sitting right now in Germany, but we are talking about, a lot of payments in the US. Part of
Yes,
that is obviously
definitely.
because they're a big market and biggest market for e-commerces, I would say. But you see the differences in terms of payments when coming to users in the US, users in Germany, and so far and so forth.
100%. And we also saw that on ourselves while testing it. So for example, in the UK, it is the easiest market right now. About 20% of people convert because people know what is pay by bank.
Yeah.
People like to pay with their bank. People know what is open banking. In Germany, it's our second biggest market because also Germans trust their financial
Yeah.
institutions and like to pay with their financial institutions. A normal payment in Germany, for example, is you actually inputting your IBAN and allowing the merchant to pull money out of your bank, which is very common here. So paying with your bank brand was an easier version of that, and thus you
Mm.
see that. But like you mentioned, every merchant wants to sell in the US and every merchant wants to have a big US base. So when we started testing in the US, we started getting different feedback from customers, right? Because customers were like, no, I'm going to skip that. I want to pay with my card because I have
Yeah.
4 credit cards in average and each card gives me different points. And
Yeah.
sometimes I have stacked cards, like a card that pays the balance of another card, and I
Mm.
want to get those points. And this is where we started. This is a problem. We see less customers choosing us in the US. So how do we overcome that? Because customers love their points. So we started with one way. Let's allow merchants and businesses to offer points and loyalty rewards directly to the customers at checkout. So when the customers pay via their bank, they get some rewards and loyalty points in order to pay. But then we also started seeing better results, but we went back to the drawing board. We were not that happy yet. So what we started doing, interviewing customers, what do you like more than points? So your card gives you points. Amazing. What do you like more? And almost the same answer across the board was discounts. Give me discounts. I will choose you at checkout. And this is where we started discussing with merchants. travel merchants, for example, that sell in the US. For example, one of the companies we work with sells trips into Europe from the US with an average travel or average ticket of 5,000 euro.
Mm.
So they can allow themselves to offer 2-3% discount or $300 discount to the end customer in order for them to pay via bank. Because the other option is if you pay directly through the card system and Stripe, one, you have a risk of chargebacks. Two, you're already paying about 7-8% fee on that. So you're already paying 400, 500 euros on that payment to get that money, and you get that money within 14 days in average. So they started offering customers $100 discount, $200 discount at checkout. And then we almost saw across the board 100% acceptance rate for customers going and choosing that
Wow.
option because they like discounts. But also with lower numbers and lower amounts, you would see a few differences in that scenarios.
That's very interesting because you're not just, setting up the infrastructure there, you're actually, trying to give them value on top of it, because if your acceptance rate is raising, they're making more money in the end. It's either a win-win, for the two of us.
Exactly. And it's also very important that Quidkey doesn't come in and like revamp your checkout. We don't replace your checkout completely and tell you, no, cards are not working. This doesn't work. Klarna doesn't work. We don't like them, yes. But also they were designed back in the 60s, 70s cards like to work.
Yeah.
So they are not very suitable to the internet today, in my opinion. But Quidkey adds, it's an addition to your existing checkout, right? So you have your own checkout, you still can have your card option, your Stripe, your Klarna, your Afterpay, all of the options, but we allow you to enable an additional payment solution at checkout. And this way you give the customer, the end customer, better and more options to pay based on the way they like to pay.
No, that's a very fair point. I know that you already and you recently, let's say, also closed the funding round. I was wondering, how did you find the capital market recently? Because we have been both very active in Germany in different period of time, and I still remember, the downturn period in 2021, 2022, when was crazy hard to close a round. And I know that right now the situation is improving slowly, but improving. So
Yeah.
I was wondering, how was, that experience for you? You find it hard? You find it, a little bit
So
easier compared to a while ago?
we closed, I think, the pre-seed round maybe a year and a half ago. It wasn't lately, but we raised 2.1 million in pre-seed round. Good enough. We also have German investors, German plug and play VC on our investment portfolio. And we have also good angels and very strategic angels on our portfolio. Some managed German entities, but mostly from the US. I would say we treated the investment, and right now also we are raising in the middle of our
Mhm.
seed round raise. We're raising $10 million in order to continue our scale and our growth. But raising is not easy.
Mm.
So when I said we interviewed 300 merchants, 500 merchants, 300 consumers, we did the same with investors, right? You
Mm.
had to speak. It's not like when like you mentioned earlier, it was much easier to raise money.
Yeah.
But right now, also, it's easy to raise money if mostly you are AI and you have AI all over your
Yeah.
product and AI native product. In fintech, it's a bit harder. In other products and SaaS, it's a bit harder. But also, I don't want to say it's a numbers game, but it's sort of a numbers game because you need to interview hundreds and you need to discuss with hundreds of investors in order to find the best investors that are suitable for you and that are going to go with you in order to go throughout the full journey, especially in a pre-seed round where you don't have a product yet, you have only interviews, you have reached product market fit on paper, but it's going to be a very long session. And then you need to find investors that really believe in the team and believe in the vision that we are trying to make, although the product might pivot and shift, and that's
Mm.
okay. And that was the more challenging part. But I guess, and I would say, we found really good investors that believe in what we are building, especially in solving cross border issues, because today this is a big problem that requires multiple fragmented solutions. And once we got everything on a page and we understood what we want to build, it was easier to raise that money for us.
So it's not just, getting the money itself, but it's actually, finding someone that can bring value to the table that can either be, business development, contacts, network, or even technical experience on payments itself. So it's not just the capital that you're looking for.
Exactly. Strategic investors, in my opinion, is one of the best things you can
Mm.
get, because then they don't only have a stake in the game in matter of money or funding. They also can help you reach the market that you want. They can help you reach the partners that you want, and they can help you reach the customers that you want, is where I see the best type of investors. And we did refuse money from investors that were willing to give money, but we saw less strategic value in that investment in order to leave a place in the table for investors that we believe can get us somewhere and that we believe can help us. And our investors have proven that to the letter what we with our raise, because of our investors and with the help of our investors we were able to create partnerships. We were able to reach out good merchants, bigger merchants, that allowed us to find design partners, that allowed us to sell without really launching marketing campaign and without really doing outreach.
No, that's a fair point. I was thinking about one of the first thing that we were talking about that was, cross-border payments, and it's impossible to ignore, the elephant in the room under that perspective. That is, of course, stablecoins. So I was wondering, what's your opinion on stablecoins overall?
Yes, stablecoins, I find them very interesting. In my opinion, for example, in transactions today, it would depend on the market though, because for us to work, for example, for cross-border payments and FX, you have multiple partners and multiple providers that allow you to do sort of ledger payments and ledger payouts, where the money doesn't
Yeah.
really go cross-border. And then you also get better rates. And we have a great partner, TransferMate, that actually allowed us to do that and build on top. And this is where I think stablecoins, when we dug deeper into it, I found it that it would create a bit more friction and would be a little bit more expensive than doing it without stablecoins, right? Because then you need to get the money, you need to exchange the money from fiat into a stablecoin, and then you need to exchange the stablecoin from fiat and pay it out in a currency in a third market. So this is where we didn't find value in stablecoins. But when we started digging deeper into different markets, for example, in Brazil, for example, in Middle East, where it's very hard for certain
For
jurisdictions
people
to
overall, yeah.
exactly, and people overall to transact money
Yeah.
across seas. In Brazil, for example, if you are collecting money from Brazil, for each dollar you would pay 3% as a tax in order to get that money out. In different jurisdictions in the Middle East, banks are not connected to SWIFT network, right? So this is where I see the value of stablecoins becoming very good in markets where it's very hard to transact money abroad. And then stablecoins can solve a real problem there. But in different markets and jurisdictions like in Europe, Australia, and the US, we honestly didn't see a need for that. And we saw it creating a bit more friction than actually solving a problem. But maybe things would change in the future. And allowing users to pay with stablecoin was also one discussion point. I think Coinbase is doing a great job with that.
Yeah.
But also, when we looked deeply at it and we went back to users and interviewed our users and our customers, would you pay with a stablecoin? And guess what? Over 90% of average users asked us, what is a stablecoin? So
Yeah,
when you are
I
in the bubble of
strongly agree with
fintech,
this one. Yeah, yeah. I think that we are biased under that perspective, because we are working in this market. We do see certain kind of edge cases, and we do see the technical part and the technical infrastructure out of those payments. But if you're asking, the normal user, people that are doing banking just as a service, and not as a full day job, I would say, they do not really need to those kind of things. Mostly if you're based in Europe. If I want to send money to Germany, I can do an instant payment and it works. I don't need USDP or
exactly.
USDC. So it's mostly when coming to doing very niche transaction that you actually need stable coins, and they have actually a very good use case.
Exactly, exactly. In niche transaction, niche markets, I think that's a very good solution, but it's not something that we are exploring at the moment. We do believe that eventually some businesses would want to hold money as well in stable coins, but it's not something that we're actively looking at the moment.
Yeah, I think that there are mainly two cases that are very interesting right now when coming to stablecoins. Is the infrastructure is itself is the first one. So actually enabling, those transactions, in my opinion, is already a very interesting good case. And the second one is when coming to B2B transaction, handling the entire flow end to end, because you actually have right now companies that are, spread across the world, and they have different kind of operation in different markets. They need to be able to transact money from, I don't know, Japan to the US in an instant. And that is something that is actually very interesting when coming to stables. But still, if you are referring to pay for an e-commerce or paying, with a local shop, it's not just a case, right now. And a
Exactly.
lot of companies out there are always forgetting, to put themselves in the shoes of the final users in this end.
Exactly.
Yeah. And I was wondering, you have a lot of experience in this field and across different markets. How do you see the fintech market today? Mostly in Europe, I would say, the German one, the European one, but overall, in the market, which are the main trends that you're following? What is interesting for you in this market today?
It's a very interesting and challenging market, I would say. One thing that I've observed lately that it has become much easier to launch a
Mm,
product without really being regulated or getting regulation. So for example, in Quidkey, we made a knowing decision. We are not going to be a regulated entity. We are not going to seek out regulation. We are not going to work with regulation, have the complexities of regulation. We want to work with different partners in each jurisdiction that are regulated and can provide us with regulated services in order to process payments or to process workflows and handle money. And this is something that, if you look at a few years ago, wouldn't have been possible, right? In
yeah,
order for you to start a fintech company in Europe, you would have needed to get a financial license, either go to Lithuania or Cyprus or
yeah.
Germany and work with a local bank and get regulated and pay lots of fees for that regulation. And also to maintain that regulation, you would need to pay lots of fees and to deposit big amounts of money. While in today, I see the trend becoming more of an API service in order to be
Mm,
regulated. So, for example, if you look at our partner Transformate, if you look at Wise, if you look at Solaris Bank, if you look at many other banks, you can get financial products with a different partner in an easy way and launch a product just by relying on their services and their APIs, where they handle all the regulated issues for you, and then you can offer the right product. So looking at fintech, it has been very interesting to see the jump that fintech has been doing over the last few
yeah.
years in order to allow different partners or different new companies to create a product and launch a product in a very fast time. So this is something that is very interesting in fintech, in my opinion. Stablecoins are also very interesting, like we spoke about, and they have many multiple use cases. But where I see also it becoming the future and what would be the future is how would fintech and payments look in 5 years, right? In 10
Mm,
years. Why would it be different? Because today we are mostly chatting and looking for products with ChatGPT, with Gemini, with Claude, and looking for it to compare different products for us. And there is some agentic commerce and some agentic payments today. And this is where I think the future of fintech is going to be, where we wouldn't be really going to shop in different stores or go to Amazon or go online
mhm.
in order to shop. We would be mostly chatting to our favorite assistant, let's say, and then asking it to compare products. And we actually wanted to finalize the payment for us, right? Can you please get that for me? Can you compare flights? Can you find me the best flight? Book it. And this is where fintech and the future of fintech is currently having problems that need different types of solutions that the market today doesn't solve for, right?
Yeah. I do believe that I was recently taking a look at the trial and the first transaction made entirely by an agent done by Visa and Mastercard, and it's kind of very surprising what they're already able to do. Uh, Kind of frightening from a certain point of view, but very very interesting. So maybe a follow up question would be: Do you see like in 5 years from now, still, the vast majority of payments being done by a human or by an agent?
I think within 5 years, it's probably going to be, don't hold me to that, but agents, I think, are going to win. Because when we look at agentic commerce, it's not only us as end consumers making a payment, right? If you look at current companies today,
Yep.
they have different needs and their needs will grow. For example, we were discussing with a potential customer about they came to us with different set of problems that we didn't start thinking about back then. And they were, okay, we are doing procurement,
Mhm.
we are working and we have a procurement service that actually checks different products and compares different products. But how can we take it right now? We still have a human in the middle.
Yeah.
In 2, 3 years, we don't want a human in the middle to go and approve payments. We can't give now the credit card or the bank account details to an agent until it just go run wide,
Yep.
because you hear lots of scary stories about what agents spend money on.
Yep.
So when it comes to B2B payments, you also have, for example, for procurement or booking travel for a company or different ways where you would need an autonomy for agents in order to be able to make decisions, make payments, but also meet a certain policy so they don't go crazy and they don't hallucinate on your money, because you
Yep.
don't want them to hallucinate on your money. And this is where I think there is a big potential for the market and big problems for us to be able to solve in the market of not only what happens at checkout and how we make a payment, but how do we allow a safe agentic payment to be processed and for it to be in a secure way without putting lots of risk on the company. So this is some of the future agentic commerce that we are looking into and where we see lots of potential growth. And we already see incoming requests and incoming questions from businesses that are already looking into those solutions.
Yeah, I think that compared to what we said in the beginning, like companies doing those kind of payments is something that I see happening like sooner than, common adoption from final user, retail users, because it's kind of easy to automate certain kind of those procurement flows, suppliers flows and everything using an agent with maybe a wallet with specific requirements, specific conditions and everything. And you treat those kind of flows as simple flows that you have in your procurement process, while at the same time I see still maybe a little bit hard for a retail user to actually automate his own, Amazon account or his own credit cards or those kind of things, because maybe that will take a little bit of time yet. But when coming to companies, I totally see the use case.
Yeah, I completely agree with you. Also, especially when you look at like AI usage today.
Mhm.
It's expected that about 10% of the world uses AI on weekly basis. But if you look at the numbers and you go deeper into the statistics, maybe 90% of them, I think I read, were using just chat GPT or competitors, that the free version where you just chat and ask about things. So actual usage of AI systems, when we are in a bubble in development, in working in a startup, you kind
Yeah.
of feel that everyone is doing it. But when you just zoom out a bit, you realize that 90% of people globally don't do it. And those who do it have a very simple use case of doing it and not really utilizing it the way we utilize it. And this is where, like exactly you mentioned, a retail customer, in order for them to start buying with agents and AI agents, is going to take lots of time for at least for the adoption to be start becoming more mass adoption. But I see the growth is going to be in more enterprise and B2B
Mhm.
payments, and procurement and supply and demand is where it's going to become a very interesting growth in that section.
Yeah. And do you see it involving also cross-border in any kind of way? I mean, I do see them be impacted as every payments, of course, but when coming to cross-border, I don't see exactly like a use case that could be improved using AI. I do see automation, of course, but there's nothing that comes in
So
my mind that you can actually improve using AI there.
in cross border, for the process of payment itself, I don't see a very, like you mentioned, good use case of AI is going to change
Hmm.
or improve cross border.
Yeah.
I don't think that there is, maybe I'm missing that as well, but yeah, I don't see a specific use case where it does that. But in payments in general, where it utilizes the best payment solution that you want to pay at checkout, whether it's a card when needed, whether it's a pay by bank that works best for you, that works best to protect you, and to utilize the best transaction and cheapest transaction for you as well as a payer, not only as a payee.
Yeah, no, that makes sense. I was thinking mostly about, source of income, proof of funds, when coming to certain kind of cross-border transaction where, the intermediary banks need anyway to have those information in order to approve the transaction itself. But again, we are coming to the fact that there is an intermediary bank and maybe you're trying to avoid that with your flow. So
Exactly,
probably
exactly.
that is also, outside of the picture.
See, proof of evidence and gathering evidence is something that is important today, especially in every payment where you need to gather lots of information and save them in a very secure way in order to be able to prove to the bank or to the intermediary bank or to partners that this payment happened and the payer has approved it. So
Mhm.
we started seeing with friends and colleagues that are building as well anti-dispute, anti-fraud, anti-chargeback solutions that started to utilize AI heavily in order to save businesses and merchants
Yeah.
time in order to come up with the evidence and proof and fill out the very lengthy, not friendly forms that are presented
Yeah.
to you by Stripe,
By Swift or
banks,
similar.
Visa,
Yeah. Mm. Yeah.
Swift, exactly. So AI definitely can help in that use cases. And I think it's doing like wonders, especially with the fact that disputes or chargebacks are growing in a crazy pace year over year. But this is as well why we chose to work with Pay by Bank, because we didn't want to handle with chargebacks. We didn't want to handle fraud. And all of those are not existent with Pay by Bank. So this is why we are focusing completely on it.
Yeah. Maybe the last couple of questions from my side. You were mentioning regulation before, and I totally get why you don't want to be a regulated entity. So that is crystal clear. But do you see regulation being an enabler of innovation mostly in Europe, or do you see that mostly blocking those kind of things? We've been talking about this for multiple use cases, multiple times in multiple markets. And I do believe that when coming to, for example, to digital banking, regulation was actually an enabler because it actually helped us to have some very good example of neobanks and digital banks in Europe that are actually having a very good impact. But when coming to other kind of sectors, for example, AI, digital identity, and others, that was actually a problem because we are not still ready from a regulation perspective. So I was wondering, from a payment perspective, what do you think about regulation itself?
So I can't say for sure I hate regulation, although like hate is a strong word. I'm opposed to being regulated because of financial reasons, because of operational reasons and complexities that regulation introduces. And it's easier
Yeah,
to work with partners that are regulated. But if I take a few steps back, Pay by Bank started with open banking in the
yeah,
UK, right? So how was open banking created? The regulators in the UK and Pay UK came to banks and decided we need more competition. We are forcing you to open APIs for account information and payment initiation, which means you need to allow entities that are regulated to connect to your APIs and push money or gather information about your customers, of course, after they get the approval and consent of the customer. So our whole business wouldn't have existed without a push on regulation. So this is something where we see was created and pushed really well from a regulation
yeah,
standpoint. And we see that banks created APIs in order to meet those regulations. But also, when regulation just comes in and pushes things, banks kind of just, okay, I just want to do the job
yeah,
and I want to meet the regulation. But if you don't have skin in the game and you're not monetizing this regulation, so you start doing it in a less good way. And this is where we see across different banks in different jurisdictions in Europe, where their open banking APIs are not good enough or are not stable enough for them to be utilized at scale. Many banks in Germany, most banks in Germany, the UK, France are in very good. But when it comes to markets like Italy, when it comes to markets like Spain, you still see there is lots of unstable APIs
yeah.
in those markets. I'm
Let's
sure I'm
call
sure
them
you're
a
very
stable. Let's
familiar with
just call them a stable.
it. Exactly,
Yeah,
exactly. But on the other hand, let's take a look at lack of regulation in the US. Because of lack of regulation in the US when it comes to payment initiation, when it comes to open banking, it doesn't exist there, not yet at least. There's some has been in the works, but banks started to innovate themselves in a way that actually is sustainable for them, right? So you look at JP Morgan Chase, you look at different banks that created those exact APIs, but they start charging partners and customers for utilizing those APIs. So I would say regulation can be very good to really enable and push the market and to create competition. And I think in the US, it was created because fear of regulation, that regulators might come in, but also because they saw that there is a need and business for that. But also adapting to regulation and working with regulators has become easier. For example, in Phoebe, Berlin, where we met, we saw that BaFin has a big stand in order for you to be openly and accessibly be able to talk about regulation, which is
Yes.
something that wasn't available a few years ago. You needed
Yeah,
to like
definitely.
really pay lots of money to big lawyers in order for them to be able in order for you to be able to have a discussion with BaFin or with any central bank. So the shift that is happening in the minds of regulators, and after lots of conversations as with regulators, they said exactly like you're mentioning, we don't want to be a blocker. We have one main point. We want to have security and privacy for our customers. And this is very respectful. And we just want to do the best in order to allow you to create good products. So this is where I think regulation is changing, and it's a very good change as well.
No, I totally agree with that. I think that it's either two points for them. The first one is regulators being a little bit more open, and we saw Buffin as a good example under that point of view. And the second point is how do you actually want to use regulation itself? You know, if you want to use it as an excuse not to do something, that is not a good use. But if you want, you can actually use it in a very good way, like you're doing with the PSD2 and open banking. Yeah, maybe last question from my side, something that I usually ask to people like you that are very used to launch companies and to build ventures. What could be like a suggestion and advice that you can give to young founders out there that are starting their first company right now, mostly in this.
That's a tough question. I would say don't take my answer seriously. I'm kidding. But
So
one
don't
one
listen to
thing
me
that
doesn't count
don't
as an
listen to
advice.
me. Exactly. This is a disclaimer. But what I think is the most important thing is not to build a company for an investor or not to build a company for something that you believe or think is right and not to start coding right away. What I think is speak to your customers as much as you can. Many founders I meet and I speak to in different working spaces I work from in Berlin tell me, "Oh, I don't want to share my solution. I'm afraid to share my solution." And then my biggest advice is don't be afraid to share your solution. If you want to build something, talk about it publicly and openly with anyone who's willing to listen and anyone who's not willing to listen. Just talk about and share about the product, share it with your potential customers, potential partners, and then get the feedback. And yeah, just build and iterate based on feedback and based on market points and data points. And this is and just like, don't overthinking, just do is my best advice, I would say.
Great. Rabea, thank you very much again for being here. It was a pleasure listening to you again. And yeah, really looking for our next conversation and good luck with everything that you're doing with Quidkey.
Definitely appreciate the invitation, Mikhail, and thank you for this platform. Appreciate
Thank
that.
you. Thank you very much. Have a good one.
Have a great, you too. Bye.